Is the rally in the British pound hitting a wall? As we open this Friday, August 14, 2026, the pound is edging down against the Japanese yen, signaling a significant shift in momentum. While the pound recently hit a 2-week high against the yen, driven by a widening interest rate differential, that momentum is now facing a serious challenge. We are seeing a reversal where the yen is reclaiming ground, driven not by UK economic weakness, but by the growing conviction that the Bank of Japan is finally turning the corner. To understand why the yen is fighting back, we have to look at the Bank of Japan. Despite the yen struggling against the US dollar recently, there is a palpable shift in sentiment. Traders are increasingly betting on a hawkish turn from the BOJ. This means the central bank may move toward tightening its policy or raising rates to combat currency pressure. Even though the yen has surrendered about half of the gains seen from interventions in late July and early August, falling roughly 0.9% this week to around 159.29 per dollar, the market is now bracing for more. The fear is no longer just about intervention, but about a fundamental change in how the BOJ views its interest rate trajectory. The core of this battle lies in the interest rate differential. For months, the yen has been under immense pressure because interest rates in the UK and the US remain significantly higher than in Japan. This makes the pound and the dollar much more attractive to investors seeking yield. However, as the Bank of Japan signals a potential shift, that gap is beginning to feel much smaller to the markets. We are seeing a tug of war. The pound's strength is being tested by the yen's recovery, as investors weigh the benefits of UK interest rates against the potential for a more aggressive, hawkish Bank of Japan in the coming weeks. Looking ahead, the volatility is far from over. We are watching two main triggers. First, the Bank of Japan's upcoming meetings, where any sign of rate hikes will send the yen surging. Second, the US economic data, specifically the CPI, which influences the dollar and indirectly impacts the yen's strength. If the BOJ confirms a hawkish shift, the yen could see a rapid appreciation, potentially making the pound sterling to Japanese yen pair a very volatile environment for traders. We are also keeping a close eye on the 160 level in the US dollar to Japanese yen, as it remains a critical psychological barrier for currency intervention. The takeaway for today is clear: the era of easy yen weakness may be transitioning into a period of high volatility. The combination of hawkish BOJ bets and the narrowing interest rate gap means the pound's recent dominance over the yen is under direct threat. For anyone watching these markets, the focus must shift from simple carry trades to monitoring central bank communication very closely. The yen is fighting back, and it is doing so with increasing conviction.